Hello, this is Jordan. This video is being recorded on Wednesday, May 31st, 2023. Thank you so much for joining me today. In this video, I'm to talk about the best historical comparison for gold. Now, this is something I've probably touched on in other videos, probably talked about it in passing, but I looked through my history of videos. I just did a quick search on YouTube in my studio area, whatever it's called. And, just looked at the titles and descriptions. And I haven't done a video definitively saying where I think gold could be with respect to history. I mean, I do lots of analogs and charts like that. And sometimes there's a good comparison. Sometimes there's not. A lot of things go into it. But nevertheless, I wanted to do a specific video touching on where gold could be with respect to history. And so only two charts today, but the first one, this is from @NewLowObserver on Twitter. He's a great follow. He does lots of great historical analysis when something happens in the markets. He looks through history and posts a screenshot or an image of a newspaper clipping or a chart from decades and decades past. So that's where I got this chart from. So I thank him for that. And the excellent historical work and analysis that he does. But this is a chart of the gold price in Paris, and I'm not really sure. I mean, this is not my expertise with respect to analyzing exactly how the gold standard worked, how gold was valued and traded in other markets during that period. I'm not the best person to ask about that, but nevertheless, I can opine here on the chart and the trading with respect to, or the value, I should say, and also the macro that drove that around the period. And so the blue years annotated in here, those are mine. So I included those in this chart so we can get a better idea of what happened. Now, going back, if gold were in a free market, remember, commodity prices had an important peak in 1948, but then a higher peak in 1951. It wasn't significantly higher, but the ultimate peak was in 1951. And so in a free market, gold probably would have peaked in 1951 or 1948. Now, moving forward a decade or so, inflation didn't really start to tick up until the early 60s. Then it broke out significantly, I think in 1964, 1965. And you can see here that the gold price in Paris made a big run here from 64 to 69. And so, again, this gives us a look at potentially what gold would have done as far as the dollar price in a free market. But it makes sense to me because inflation from the mid 60s to the late 60s moved, it had this key breakout. It kept moving up. And then the 69 to 70 period, very similar to the last couple years in that was the first period in a generation when inflation really became a problem, and more so the first period in a generation where the Fed actually had to hike interest rates. Remember, we were just coming out of the Great Depression. They had not hiked interest rates. I mean, they did a few times, I think, in the 50s, here and there, and maybe in the early 60s. But it wasn't until the very end of the decade when the Federal Reserve, like in recent years, where they had to tighten significantly. And so the rate of inflation did come down. I think it came down from 6 or 7%, maybe down to 2% or so, something like that. I apologize for not having that data handy. I'm just going off my own memory. But, and so that was enough to push down the gold price in Paris. And so in a free market, it makes a lot of sense that gold from the mid-60s to the late 60s would have had this big move, and then it would have had a correction due to the tightening of Fed policy. Again, something we have seen in the last year or two. And so big picture, we can see here gold really started that breakout move in the mid-60s, 64, 65. So that was 13, 14 years after the previous peak. And so this chart, it also aligns really well with the gold stock breakout in 1964. And so I have mentioned this a few times, but again, so look at look at the gold price now, where it's really close to breaking out. It's made a slightly higher high. Hasn't broken out yet. I mean, it's correcting now. Probably continues, at least in the short term, for the next couple months. But it's very similar to where gold stocks were in that 1963, 64 period. And then of course gold stocks had this huge breakout. So that's why I'm saying the real best comparison for gold right now, based on the things I'm talking about, based on gold stocks being a proxy for gold, is 1964. And just a couple other things I want to mention. It's interesting, gold stocks, they were not an inflation hedge in the, in the the mid to late 1940s. They were not really an inflation hedge, yet they became an inflation hedge in the mid 1960s because, again, the gold price was fixed. And so, you could not buy gold in the 1960s. And so there weren't, and back then you didn't have things like tips. You couldn't really play Forex. You couldn't really invest in emerging markets. So for all those reasons, I'd love to see valuations on gold stocks. I suspect in the 1960s, they traded at much richer valuations compared to today for those reasons that I just mentioned, given the lack of alternatives. So that's probably why, people were hedging against inflation. They saw inflation breaking out. That's probably why they invested in gold stocks at the time. So just a little background on that. But we can see here, again, the breakout in 1964, that looks to be very similar to the breakout that we're going to see in gold, in my opinion, be it over the coming months or coming quarters. And look, I've done lots of videos about this, but if we look at what's going on as far as macro and, specifically macro in the U.S., and I've talked about this in other videos, numerous comparisons to the mid to late 1960s. You look at expected returns, you can see the similarity. You look at nominally speaking, the S&P. Now, the S&P's secular bull didn't end until 1968-69, but even before then, the S&P in real terms, I mean, it probably peaked in 64. The nominal gains really slowed down after the 1962 peak. You can see there several significant corrections there. We've already had three. I put in the 20% in 2018, 35% the COVID crash, and then most recently, 27%. And who knows, if a recession hits in the coming months, good shot that probably gets at least a little bit worse. It goes a little bit deeper than that low. And then also, if you look at inflation breaking out in 1965, you look at bond yields starting to move. So there's just, as far as the big picture macro, it also points to the mid to late 1960s. So, for all these reasons, it looks to me like 1964 in the mid 1960s, that is the best historical comparison for where gold is right now. And this is important. It's another reason why, if we look at other things like, valuations and secular trends, this comparison also shows that, precious metals are at the start of a real secular bull market. This isn't just going to be like a 3 or 4 year blow off move and then that's it for gold. I mean, this is something that's going to last at least a decade, probably going into the 1930s, probably going into the 2030s, in my opinion. But I don't want to get ahead of myself and, pontificate on all these things. But there it is. The best comparison. It's not 2000. It's not 1970 for where precious metals are right now, and gold specifically. It's the mid 1960s. Let me know what you think in the comments. Thank you so much. I'll talk to you guys again in the next video.